Welcome to the Startup Funding Espresso. I'm Hall T. Martin, the host of this show where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. A venture fund brings a fiduciary responsibility to those raising the funds from limited partners. A fiduciary means the VC must act in the best interest of the investors. VCs who sit on the boards of their portfolio companies also have a fiduciary duty to that company. There are times when the two fiduciaries come into conflict. It's best to have your duties to the investors stated in the PPM, such as liquidation preferences, preferred shareholder treatment, etc. The VC must appear to be following a fair treatment of both parties and may need to engage in negotiations to resolve the conflicts. VCs often use incentives such as offering additional equity to either the startup or the fund's investors to resolve that conflict. For example, the investors may want to see an exit sooner rather than later. The startup founders want to wait to potentially gain a bigger exit. The VC can offer additional equity to the founders if they agree to an exit now. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start up something today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.